Hello and welcome, and today is Thursday, the 15th day of March 2018. My name is Derek, and everything you do within your own risk, own reward. This will be a silver chart video, and it's going to be like a lot of the other ones because nothing much has really changed. However, I have created some quarterly and yearly charts with the 18 average as well. So those will be two new charts I'll be going over, looking at this on multiple time frames: the daily, the weekly, the monthly, again the quarterly and the yearly charts. Three of them available on the TradingView platform. Okay, so within the first chart, which is the daily, what is the overall trend within the time lapse shown on the screen? Well, you can consider it sideways, choppy. You can't call it bullish, and you can't say it's really that bearish. It's considering that this would have opened at around 1625. So since the August the 8th of last year, silver has increased in value by that of about 0.75%. You have your moves above the 18, which was the summer of last year, silver going up to 18 and change. Then a decent move down towards where we are now. Small move higher, but mainly going sideways up until the end of November. And then 1, 2, 3, like 6, 7 days in a row. Price falling from 17.16 down to about 15.68, so about $1.50, 10% down. But it got it all back in here. Now it took to go down November 27th through, I'll even just call it that of December the 7th, week and a half. It rallied from December the 12th, basically up to January the 2nd. That's about 3 weeks. With the silver market, pretty much I would think the stock market and all the non-crypto markets, these crypto ones priced in Bitcoin, is the opposite that I'm talking about. But in these cases, markets go down faster than they go up. Okay. Now, within such a move after this move higher, you got the V-shaped formation. Oh, is this going to be a failed breakdown fast move higher? Well, for a while it was holding this level. We now see the resistance here, which was support, but it hasn't really been breaking down much either, showing a lot of neutrality and choppiness. Price action within the 18, obviously within its correctionary trend. It's been there for quite some time, and it's barely going below the 18 lows right now. Okay. Maybe we come down and test this lower area. If we do, maybe we break it. Maybe we find some good support there. Maybe we find weak support there, which would mean going down to 1620. And then basically rallying up to about usually 62% of this move. So a lower high. That's the daily. And when I talk about choppiness, that's what the next chart is going to amplify as well. So since this one opened on March the 9th, 2015, and it opened at $15.88, price action is up about 50 cents. So that's a little over 3%. Yay! Choppy. Choppy, choppy, choppy. And there really isn't much more to go about. Like whether the price action's at the 18 lows or 18 highs, and whether it's even breaking below them or breaking above them, really doesn't make that much of a difference, not on the early stages anyway. I mean, if you're looking to buy with price action really cheap, at least in the dollar cost number, it's always better to wait for these moves to come lower. Therefore, if this breaks down below here, you should get at least 15 3/4. And this is all short-term analysis, monthly chart. Well, this one was at, what's the low here? Well, open was 672. 150% up. So it's in a uptrend, but this is sure as heck a pretty good downtrend as well. It was, of course, up a lot more when it got up to this $50 handle back in 2011. So we're seeing its correctionary move, which has just forced a lot of choppiness. This level of support that started on in the summer of 2013, that broke through in the fall of 2014, has been resistant since it first got there about 2 years ago. And yeah, it's resisting a little under that area, but it is still holding this point so that the 18 average is very much sideways. Sure, it's barely declining a little bit with the 18 highs, but it's holding this key support level. It's got to get above this for the final stage to revert trend. Band flattening out, which occurred early 2016. Establish resistance, and you come back to the band. So it's been there now for a year and a half. Okay, no signs yet of it having a major breakdown below, which would be falling down below this support level here around $15. And of course, no sign of it not even testing up to about 20, let alone breaking that figure. So those are the charts from TradingView. Let's now move on to the quarterly chart. Actually, I want to do the yearly and then I want to go to the quarterly. And this was drawn up quickly on my spreadsheet, which doesn't have the years at the bottom. The first year is 1913. And there's no 18 average. I'm going to put that in on a line chart very soon. But you've seen that the earlier price action going sideways, it would have started its breakout. This in here is 1968 when all of these single lines stop. Well, when the regular moves start happening. 1968. 4 years of going down to $1.25. And then 1, 2, 3 years going from $1.25 up about to about $7, $8. 3 or 4 years doing this sideways movement, and then this is the type of big moves that silver had. This decent green candle, but in 1 year you go from 50 or 5 to 50. And of course this top was right after the year ended. This was December 31st. Obviously this was late January when it made this top. So 1 year, 10x increase in the price of silver. So when I talk about cryptocurrencies and understanding wild volatility, this movement and correction really showed me a lot looking at this via a log scale. And you'd be thinking, wouldn't the 18 average have corrected within the point and then now be correcting in here? Well, yeah. So now let's show it. And here we can see this is a swing line. So if it's in an uptrend, it will take the highest price for the period. If it's in a downtrend, it will take the lowest price for the trend, and it uses the short term, a front-weighted 3-day average, to determine what the trend is. All right, so after we see this band was declining a bit, band's flattening out, so going sideways in here. Nice little break, roughly, this is again 1968. Coming down to 1972 to the 18 average of lows, up to this 1980 high, and this large move managed to correct within the 18 average. It pretty much stayed flat. There was a time at the end where it was barely going lower. That's not uncommon. It had a pierce below the 18 average of lows, and ever since it made it towards this point, although pierce is not shown in this, it really stayed quite much below this 18 average. Again, this is a line chart, not like a candle chart. And then getting above here over the run from early 2000s to the 2011 high. It's a matching high. It's not a double top. A double top would be a move back down to the $4 low. So far, when it's came down to this 18 average, it's actually been holding it as a level of comeback support. So one way you can look at this is, okay, you want to resume the uptrend. It's not reverting because it never did go negative, but it did take a large, major neutrality trend. So before it's always about establishing resistance. This is getting close to near that of previous high, which it did. Come back to a correctionary mode, higher high, matching over above here. The 18 average is basically where you go, and it's where it is. So making a move above here would create a cup and handle style formation. And you'd get a very decent break going above this level, of course, on that occurrence. And this is the final chart. It will be the quarterly chart. And in this situation here, we're looking at that exact same data in the correctionary phase. Price action, when it came to this 18 average, barely supported it at the closes, resisted the highs, had one leg lower from the lows, came back, resisted the highs, matched the previous low, got above the 18 average of highs, albeit it was lower than the previous one, and it didn't hold it. It pierced below the previous lows, but in essence terms, it stayed, and well, it matched that level. It had a few periods staying there, but it eventually recaptured its lower end of this range as this 18 average shown. Any price action above the 18 average of highs was usually resistance, and then price action going really much to the 18 average of lows, and then this one case below it was support. So the breakout of resistance, this was the interesting pattern here, which took place roughly around 2004, 2005. And that's when it consolidated for about 3 periods, or about a year's worth of time, about 12 months or so, at this interesting key area of previous resistance. And then it had its nice little move, some choppy up and down movement, but a lot of this was based on that 2008 situation when all the markets were falling. So if you throw that aside, this could have just easily consolidated within that band. But regardless, throwing away any of the fundamentals, and after this chart I will not be, do you have the correctionary move back up to that previous high, and again in this case just a small move down below it. So in the monthly chart and the yearly chart, price action is in a flat correctionary move, where this one is in the resistance form of such. It's had one leg lower from the 18 at lows. Now, interestingly speaking, after it made this low, this is a very unusual development for the market just to do this sideways, not doing anything for even 2 or 3 periods like that, and then having a normal move like that. Okay, that's normal. Well, but you would normally expect that instead of having a bunch of nothing happening after a move of this magnitude, that you're either going to continue the down move in a violent direction, or at least grind it to a downtrend with lower volatility, but still decent volatility where it would be destructionary move, or at least come up and make a move into here. See, I was very surprised it never did make any of those large moves within that time, but the market's always going to do what it's going to do. So there's this one little leg lower, a rally attempt finally to the 18. So when you talk about reversal of trend on a bearish level, you establish this point of support here, higher than this higher low, and you've resisted within this band, that if it rolls over down below, then that would establish it. Now, the problem with such is you hit this high, which is all great in bearishness, and you start to go lower, again, great in bearishness, but why are we making a move back up to this little area here? It's already corrected long enough in here. We should be falling now. I mean, it still has to break above this resistance, but again, the bullish level, you can see more on the cup and handle formation. If you start to see the movements go above it, a lot of times you can get moves sort of like we see in here, where you get nice moves above the 18. It doesn't take that many moves to get to the key points. In fact, don't be surprised if it's only 1 or 2 periods, in this case like a half a year, even maybe 9 months, where this price could like do better than double. as it's still playing around testing these bigger areas. Later on, of course, because I'm going to change the scaling for this a little bit. And let's do 1225. On a logarithmic scale, if you break this resistance, a move to the upper end of this would be breaking 1,000. And to me, that looks, that would probably seem somewhat normal on a situation of such an event. So I'm going to go back to this chart, or the trading view, as I finish off my talk about the silver. I find the bullion metal to be the only thing at this time that I can safely say that in 10, 20, 50 years, just even the 10 number, that this is definitely a store of value. I define a store of value as something that can hold for a very large amount of time. And at least 10 years is the smallest I can talk about for long-term talking. But will hold and give you, and not dramatically destroy the value of your wealth. I'm not stating a store of value increases or even maintains your wealth. But if something you hold can buy 20 units of something, if later on it gets you 15, so be it. The fact that it can still get you somewhere around that number is great. But when I talk about fiat currencies, if one fiat currency can get me, or 100 of them rather, and get me one of whatever particular kind of unit, what happens if I'm going to need 200, 500, or 1,000 later on to get that one particular unit? Is there a decent chance of that? Well, just even the 1970s, the inflationary move was major and the dollar didn't even collapse. And when you lose 6, 7x purchasing power, that's losing value. Losing 40%, 30% of your purchasing power, suck it up basically. But it's not bad is why I'm saying for those kinds of losses. And then you look at the situations of the past of fiat currencies of which have imploded and gone to nothing. And we have never, ever in this world had a situation of electricity. We have never had a situation where people have not been disawared to such a currency for such a very long time, where anyone who's been aware of this information of how debt notes are created, and are probably at least 30 years old, would remember a childhood where you probably had no idea. I had no idea about the greatest Ponzi scheme in the world. So on a fundamental level, many people are learning this one by one, and this has been going on for 10 years. So therefore, does it surprise me when Bitcoins and all the cryptocurrencies are getting the attraction in which they have been? No. And the prices long term have done very well in an uptrend. Yet in this situation, it was about $16 and change when I started realizing back at the end of 27, start of 2008, something's wrong with this world. The dollar's actually kind of screwed up, I think, is what I was thinking then. Do I really, like, that I'm learning gold and silver? Really? And I bought some a couple months later. And yeah, the price is the same. No bullish movement. There was this down move, this up move, this down move, this sideways movement. But we've also learned within the time how the markets actually move, who the market makers are, and so on and so forth. And I do believe there will and there should come a time where trading not only stocks but everything on the blockchain as far as the investment style, but even on a real tangible level, because silver and gold are very divisible to many fractions if you want them to be. on the blockchain, where you could pay 2.1504261 grams of gold to somebody, or silver, or whatever. And by doing such, that means somebody would have those numbers in their blockchain account, or wallet, like anyone else. And assuming you had 27.1563 whatever amount ounces of silver, you could effectively take that. Now, in any type of situation, it might cost you 1.05 ounces of silver to get a generic ounce of silver. It might cost you 1.2 ounces to get one American Eagle. And what I'm saying on that is, when you have the tangibility of it within the blockchain and you want to redeem it, that would be your way of paying the premium for whichever coins rounds that you happen to be accumulating. And then when distributing, maybe there's a way you can send them into some sort of certified warehouse somewhere, and you know for sure that they're safe, and that you get your cryptos, blockchain silver, which you can trade on the market, and so on and so forth, or even better yet, use as money, as a medium of exchange in the real world. But let's get real. If this happens within the actual, if you're talking about silver being money in this kind of form, I really highly doubt it. Maybe it will be that as well, sort of like you got Litecoin, Ethereum, and Bitcoin. I'll give it that, but if it's going to be one, it's going to be gold. And I do see silver as a major industrial metal. And my prediction, and this is my prediction, is there will come a time, an age, where it's an industrial revolution, where silver is majorly needed to be melted down and used as the commodity it is, which is the reason why I have it as real, tangible value. Bitcoin, Litecoin, all those cryptocurrencies, I don't know where they're going to be in 10 years. But the silver, the value of it, you cannot create more. It's just an amazing item, and it's so hard to get what's available within this planet. That I love those factors within the precious metal. And in a situation of such, where there's been a lot of people investing into, of course, the precious metals, and there's going to be a lot of people that are going to sell it into such, because the prices will be so high for such a commodity. The gold to silver ratio, and I can get that chart up on the screen. I wouldn't be surprised if it, the webbots talked about it going to 1. Here are some historical numbers. Ratio down to 13.99 back in 1980. I feel the fair number is between 6 to 8. That's my feeling. And I realize in market conditions, if a price that's at 80 that I feel is worth 90% lower than that is to eventually have that move, well, if it can go that much higher than what it's worth, which is basically close to 10 times, then yeah, maybe this thing could go to par. And when those levels get to that point, I'm going to be looking to unload a lot of my, I don't have them yet, and I'm hoping I get a bunch of them based on the crypto trade. 100-ounce bars, I don't have a single one of those, but all the generics, the 1 kilo bars, the 10-ounce bars, all of those, all the 1-ounce rounds that I have from Sunshine Mint and from all of the other generic spots. Here you go. Melt them down. Wow, look at the whatever monetary unit that I happen to receive back. I don't know which that would be. And then well after that, this is long-term thinking. They're talking, I don't know how long. This could take 20, 30, 40 years for this one. But after everything settles out from such an event, that when you look in 2050 and beyond, and you see things like any pre-industrial major shift event, like whether pre-2024, pre-2020, whatever number it happens to be, any of those good coins in a very good MS condition, MS63, up to MS70, of course, man, they're going to be worth a lot. So you could have something like just a 1-ounce nice whatever coin, and that coin could sell for whatever 10 newly generic minted rounds from 2070 might be, or 2050, or whichever year. One might be worth 10 or 20 or 100 of them because of their superior rarity at that time coming in. It's a possibility, but for myself, I make sure that I want to hold as many of those nice pieces that I can for such a possible event. I will never sell all my silver. There's like no way that will ever happen. And yeah, so thank you for tuning in to today's video. I hope this helped, was informational in one form or another. For those of you into cryptocurrencies, every day is crypto day, and on those days where I feel like accumulating physical, I do so, and this is no advertisement, from silvergoldbull.ca. I think they sell to the American customers. I'm not too sure on any of that, but within Canada, $500 minimum order for free shipping. And they also have a 10-ounce bar at spot price, one per household. Again, not an advertisement. And I have bought in that bar. I'm a happy customer with them. And I've heard, never bought from JM Bullion, whom accept cryptocurrencies, in that of buying gold and silver. And as time moves on, it should probably get easier and easier to, as long as silver is easier to accumulate, to transact with cryptocurrencies and Bitcoin and silver and such relatively easy. And I find the availability, especially with my mathematical knowledge of just base numbers and chart analysis, that as a trader I can increase Bitcoin numbers and within profits accumulate the physical metal. It's the best way, and I've been able to accumulate pretty much almost as much since I started trading cryptos, in what's less than a year really, than the entire duration beforehand. It's not going to take me that many more orders to have more silver accumulated from cryptos than from every run before, which is basically, well, 2008 to 2016 for buying silver via fiat currency. All right then. Thank you for tuning in. Happy Crypto Day, and bye-bye.